Good afternoon, everyone, and welcome to the Catholic Super Annual Member Meeting for the 2022-23 financial year. Most of you won't know me, so I'll start by introducing myself. I'm Michael Cameron. I was appointed to the role of Chair on the 1st of November this year, and it's a great pleasure to be here with everyone. I've got a few other introductions to make, but before I do, I'd like to acknowledge and pay my respects to the traditional owners of the land from which I'm speaking today. Joining me today is our CEO, Scott Cameron, our Chief Investment Officer, Andrew Howard, and our Chief Member Officer, Alexis Harrison. We also have other board members and executives in attendance. And thank you to everyone for joining us at this time to go through the process today. As we have a quorum of directors, as well as our auditor present, it's my pleasure to declare today's annual member meeting open. It's important to note that the information we cover today and the presentations you'll see are general in nature and relate to the fund as a whole. The information doesn't take into account personal circumstances such as your individual investments or your financial objectives. If you'd like individual financial advice, we have a financial planner who would be happy to assist. We've included a contact number at the end of this presentation for your reference. In our meeting today, I'll make some opening remarks on behalf of the board, then I'll hand over to Scott to present on behalf of the executive team. Andrew will follow with a look at our investments for the year and will provide some insights into the current outlook and what they mean for the fund. We'll then hear from Alexis, who will share how we've proactively supported you through the working lives and into retirement. Our goal is to continually improve the services, products and interactions that we have with you. Alexis will share details regarding 3 big updates since last year. There will then be some time to take questions. We've already received a number of questions prior to the meeting, and it's great to see such strong interest and engagement from our members. You can ask us questions during the meeting if you'd like to, simply by using the Ask a Question function located on the right-hand side of your screen. If you are asking a question today, we can only take questions about the fund itself. If you have specific questions about your personal account or your circumstances, please direct these to the helpline. We will provide you with their number at the end of today's session. And if we don't get a chance to answer all of the questions today, because of time constraints, we will provide the written responses to every question asked. These will be included in the meeting minutes, which will be available on our website in January. I'd now like to introduce you to the trustee board appearing on your screens now. Over the year, we have had 9 people on the board. Each board member brings a tremendous level of experience, skill and commitment to our fund and to our values. The board has 3 employer representatives, 3 member representatives and 3 independent directors. As mandated, the chair is a board-appointed independent director. This mix allows us the flexibility to attract and select high-calibre people who, as a minimum, meet all of the required legislative standards. I'd like to acknowledge the tenure of Member Director Jan Dekker, who left the board on the 30th of June 2023 after more than 6 years of service to the fund. On behalf of the board, I sincerely thank Jan for his valued contribution. We also welcomed Julian Widdop to the board in the position of Member Director on the 1st of July 2023. Julian has more than 15 years experience working in the superannuation industry with significant board experience and expertise in investment governance, business, finance and risk management. As a qualified actuary and an economist, Julian has advised major super funds and served as a director for many Australian and international companies. The core focus of the board, the executives and in fact the whole team is to support our members in preparing for financial freedom in retirement. Catholic Super has been helping Australians grow their super and plan for their future for more than 50 years. During that time, we've guided the fund and the savings of our members through the introduction of the superannuation guarantee scheme, the global financial crisis, pandemics, and a period of significant growth for the fund. Our commitment to our members has not wavered, and it's the foundation of everything we do. In 2019, we joined forces with Equip Super to become a major super fund trustee. Today, we offer super, financial advice and retirement income accounts to more than 140,000 members Australia-wide. And we work with just over 9,400 different employers to deliver super and retirement benefits to their employees. The partnership we share with these employers is a standout feature of the way that we operate today. We believe that working closely with our employers is critical to helping our members prepare for financial freedom in retirement. We continue to have strong relationships with the education, healthcare and aged care and transportation industries. This year, we also established the Catholic Super Advisory Board to support better outcomes for our Catholic community. And we established new relationships with Catholic Schools, Broken Bay, and Catholic Schools Office, Diocese of Maitland and Newcastle. We're proud to be a fund for all employers and all Australians. Now, it's testament to the tremendous efforts of our whole team that we continue to be recognised and awarded by independent rating agencies. Super Ratings has awarded Catholic Super their highest platinum performance rating as a best value for money fund for more than 15 years in a row for both our super and retirement income products. We received a 5 Apples rating from Chant West again in 2023, which is the highest quality rating a super fund can get from Chant West. I congratulate the team on those results, and they reflect the hard work and the dedication that goes into providing our members with the products and services that you've come to expect. One Fund and positioning the fund for growth. As a new director, I'm not yet 2 months into my tenure, I've had the good fortune to arrive in a very exciting time in the fund's overall development. The past year has seen a whole of fund focus on our key One Fund initiative, a multi-year, multi-team program of work. The objective of One Fund was to fully integrate the operations of Catholic Super and Equip Super, simplifying our overall operations and consolidating our foundations. Scott will talk more about this in a few moments. With the various initiatives and improvements associated with One Fund taking effect on the 1st of July 2023, the fund is well positioned for the future. I'd now like to take a moment to acknowledge the contribution of my predecessor, Danny Casey, and the role he's played in helping position our fund for growth. Danny stepped down as chair of the board on the 31st of October this year, having been an integral part of our fund and the Equip Super Fund for the past 6 years. Danny's leadership and stewardship were pivotal in guiding the fund, not just through the joint venture in 2019, but also through the global pandemic that has dominated the past few years. His ability to prioritise our members has been instrumental in shaping a strategy and culture that drives the best possible superannuation experiences, products, services and retirement outcomes for our members. So on behalf of the board, I extend our sincere thanks to Danny for his dedication and leadership, and we all wish him every success in his future endeavours. I'll now hand over to our CEO, Scott Cameron, who will take you through the fund's achievements over the past financial year, including the One Fund program and what it means for members and the fund in the coming year. Thanks, Scott.
Thanks, Michael, and good afternoon to everybody. Thanks very much for joining us today. I'd like to extend a warm welcome to Michael, who's still, as he says, relatively new to our fund, having just joined us on the 1st of November. It's great to have an opportunity for you all to get to hear from him so early in his tenure as Chair of Catholic Super. And Michael comes to us with a great deal of knowledge and expertise in investments, finance, strategy and people leadership. He's also an experienced non-executive director and board chair, and we really do welcome Michael to our fund. Each year, this annual member meeting gives us an opportunity to look back over the year that was, and also to give a sense of our priorities and expectations as a fund for the year ahead. And looking back, the past financial year wasn't without its challenges. We saw ongoing conflict in Ukraine, cost of living pressures, successive interest rate rises both locally and overseas, and high levels of market volatility. But pleasingly, despite these challenges and their overall impact on markets, all of the fund's investment options delivered positive returns for members for the year ended 30 June 2023. Our Growth Plus investment option returned 13.01% for the year ended 30 June 2023, and an average of 8.92% a year for members for the last 10 years. Our Balanced Growth option delivered 9.64% for the year ended 30 June 2023, and had an average return of 7.57% a year for the past 10 years. These are very pleasing results for the fund and for you, our members. In a few moments, Andrew Howard, our Chief Investment Officer, will provide you with more detail on markets and how we're positioning the fund's portfolio. Financial year 2023 was a pivotal year for the fund, and I'd like to now talk about some of the significant developments and milestones for the fund that we achieved. As a fund, our core purpose is to support you to prepare for financial freedom in retirement. Growing our fund while also nurturing our existing connections is central to helping us achieve that. This allows us to strengthen our foundations and also achieve greater economies of scale, which in turn increases our capacity to deliver a range of important benefits for you, our members. A key benefit is increased value for money, as greater scale helps us to keep our fees lower for members. Soon after our merger with Equip Super in 2019, for example, we were able to reduce investment fees for Catholic Super members. Further, in 2022, we decreased the asset-based fee cap from $1.25 million to $500,000 for retirement income members, and also abolished a number of peripheral fees, such as contribution splitting fees. And from the 1st of July this year, we introduced a more cost-effective administration fee structure for accumulation accounts, with all of our accumulation members better off as a result. Increased scale also paves the way to the provision of better member services. It gives us access to broader investment expertise and a wider range of investment opportunities. And it also assists us in keeping up with the ever-increasing regulatory and compliance requirements. But it really is important to get that balance right. With approximately $32 billion in funds under management, we're currently at a size where we believe we're big enough to add value for our members, but we're still small enough to care. Our strategy for growth is designed to help us achieve the best of both worlds for our members, to increase opportunity and the value we provide, but also maintain that personalised level of service and care that we're known for in the industry. It's what most members expect to receive from us as your super fund, and it's something that we'll continually strive to deliver on. In previous years, Catholic Super underwent significant growth when we merged with Equip Super. Over the past year, our focus turned to simplification and consolidation through our flagship strategic program, which we referred to as One Fund. One Fund's key objective was to strengthen the fund and position us for future growth by streamlining our operations and product offering across the Catholic Super and Equip Super brands. It took a whole of fund effort, with all of our people playing a role in its delivery. I was particularly proud of the level of cross-fund collaboration we achieved as we worked to deliver this program of work. And as a result, we entered this new financial year with one MySuper product, one investment choice menu, one set of fees, one central administrative database, and importantly, one way of doing things. Over time, One Fund will deliver a range of benefits for members, including an overall reduction in fees, a more streamlined and consistent service experience, and an improved menu of investment options, all with a view to helping us support you prepare for financial freedom in retirement. Alongside the One Fund program of work, we undertook a number of additional projects to further pave the way for growth. This year we set out to simplify and consolidate the Catholic Super brands in order to provide a more consistent service experience for our members and help position our fund for future growth. On the 30th of June 2023, we retired sub-brands of Catholic Super, My Life My Super, My Life My Pension and Transport Industry Super, with members of these funds becoming Catholic Super members on 1 July 2023. Our members and employers have always told us that the Catholic Super brand is important to them, and we maintain this unique identity to this day. In fact, we're the only Catholic Super fund in Australia. We enhanced our digital capability, rebuilding our 2 primary websites from the ground up with greater personalisation and information tailored to where you are in life. The Catholic Super and Equip Super websites now share the same development platform, which has improved how efficiently we can run and maintain these sites. We were very pleased to win the Best Member Education Award for 2024 as judged by Super Ratings, and that's due in large part to the work we've been doing in the digital space, but also the work we're continuing to do across our advice and other education channels. We further improved our default TPD insurance cover with a number of key changes. For example, we simplified and broadened the eligibility for making a TPD claim for those members who believe they're unlikely to ever be able to return to work because of illness or injury. And these changes did result in a slight increase in the overall cost of TPD cover for our members from the 1st of July 2023, but on balance, we believe the overall package of changes will be more beneficial for those members who find themselves in a situation where they may need to claim on their cover. Someone who's been very much involved with these initiatives is our Chief Member Officer, Alexis Harrison. Alexis and the Member Office team are primarily focused on the overall experiences we provide for you, our members. And shortly, Alexis will take you through our retirement approach, as well as our refreshed brand, our digital enhancements and product improvements. Each of these initiatives is designed to provide you with a better and more consistent experience from your super fund. One program of work that's always ongoing for the fund is the continuous assessment and strengthening of our approaches to cybersecurity. Member privacy and the security of our members' funds is of paramount importance. We have a dedicated data governance and security team that's responsible for our data governance policy, our associated systems and processes, and 24/7 monitoring of our networks. This team works with external security specialists to implement multiple security measures, including strict data handling protocols. We also conduct regular audits and tests to ensure these systems and processes are working. Cybersecurity threats are constantly evolving, so it's critical to remain vigilant as possible and as adaptable as possible. Some of the measures that we've undertaken over the course of the year include tightening our data loss prevention safeguards, expanding our capabilities in proactively seeking out potential threats, and reinforcing our technology infrastructure and operational capabilities. And we're also at the early stages of exploring the benefits, capabilities, and potential impacts of artificial intelligence, or AI. And as part of that, we've assessed our current identity verification processes, and the team's working to protect us from the threats of AI identity replication. And of course, AI is a rapidly evolving landscape, and we'll continue to monitor for any developing threats to our existing systems in this area. I think it's important to reinforce for all members that we will never ask you to provide personal information via social media or SMS. If you do receive such a message purporting to be from Catholic Super, you should delete it and contact us directly. Similarly with email, if you receive an email claiming to be from us, but it looks suspicious or is particularly unexpected, then don't hesitate to notify us to verify whether we've sent this communication to you. And the same would apply to a phone call from someone claiming to be from Catholic Super. If you have any concerns about whether it's a legitimate call, ask for the person's name, then hang up and call us directly to verify the caller. As I said, threats to the security of your personal data and information are always evolving, and they're becoming increasingly sophisticated. So it's on all of us to remain vigilant and err on the side of caution when you need to. Throughout the year, we've continued to work closely with our employers. We support our employers with superannuation, insurance and financial advice information that in turn assist their employees who are Catholic Super members. This support contributes to workforce retention and productivity. Our national team of relationship managers visited workplace in all corners of the country, delivering workplace seminars, providing super health checks, sharing tips on how to boost your super, and offering referrals to personal advice from our financial planning team. Of course, none of this would be possible without the team here at Catholic Super. And we know that employing, training and supporting a talented team is essential to ultimately providing great experiences for our members. It's also essential to our continued growth as a fund. Over the past year, we undertook an extensive review of our people frameworks, policies, systems and processes. We implemented a range of new programs and initiatives to support our people, drive employee engagement and foster and enable a high-performance, risk-conscious culture. The result is a stronger foundation for our people and our fund, which positions us well for the future. This year we reset and refreshed our values. Values underpin the employee experience and the culture at Catholic Super. We ran a series of workshops to educate our people on the new values, expectations for behaviour and the role that everyone plays in achieving our strategy and vision. Those values are member first, accountability, respect and collaboration. And they really are more than just a few words. These values are the guiding principles and the fundamental beliefs that help us function together as a team as we work towards our vision and purpose. And this year we also introduced our Superstars program, a monthly award that recognises team members who bring these values and the objectives of Catholic Super to life and achieve great outcomes for our members and our fund. Recognising and rewarding employees is important in every business and helps build a culture where people strive to do their very best. This year we recognised 20 superstars for their efforts and achievements, from collaborating when implementing new systems for the fund or taking accountability for a complex issue from start to finish and working to achieve a resolution for the member, which exemplifies that core value of member first. We continue to develop new learning and development opportunities across all levels to upskill and train our people, including new employee learning programs, new people leader forums and leader development programs and a new senior leader development program. Importantly, we know these initiatives and improvements are having a positive impact. We've seen a substantial increase in our employee engagement scores over the past 18 months. And we know that if our people are more engaged, then they're creating better experiences for you, our members. I want to thank our team for their continued commitment and dedication and for all that we've achieved over the past year. And now I'd like to hand over to Andrew Howard, our Chief Investment Officer, for a look at markets and fund performance. Thanks, Andrew.
Great. Thanks, Scott. I'd just like to extend my warm welcome to everybody who's joining us today as well. So I think it's fair to say with the movements that we're seeing in markets at the moment, no doubt you're all keen to know how that's been impacting the fund and how we manage the fund's portfolio through a fairly volatile market environment. I will certainly be addressing that today. But first, I'd like to briefly touch on the One Fund program of work that Scott mentioned in his presentation and the impact that work has had for the investment offer. A core objective of One Fund was to streamline our investment offering across Catholic Super and Equip Super. Throughout the year, the investment team undertook the extensive groundwork required to fulfil this substantial piece of work. One of the key changes coming into effect from 1 July 2023 was the change to our existing MySuper default investment strategy. We moved away from the previous life cycle approach, where members' balances were gradually de-risked in their early 50s to a single diversified investment option. And from 1 July 2023, the Catholic Super default MySuper investment option will be the same as the Equip MySuper investment option. This is a broadly diversified investment option with 70% growth assets such as shares, property, infrastructure and some alternative investments, and 30% defensive assets, including traditional and alternative fixed interest, as well as cash. This alignment of the fund's investment offer means we entered the new year with a single set of investment options across Catholic Super and Equip Super. This will increase our operating efficiency as a fund in the future, and that helps to keep our costs lower for you, our members. Turning now to investments and performance, I'd like to briefly outline the fund's investment strategy and the very important role it plays in our ability to provide members with strong long-term returns. Our core objective as the manager of your super and retirement savings is to grow your wealth over time, so you're better equipped for financial freedom throughout retirement. In order to achieve that, we take an active approach to managing investments. That means we make proactive investment choices based on market conditions. At the same time, we're patient, disciplined, and not distracted by short-term market noise. And while financial markets present opportunities and risks that we manage over shorter timeframes, our main focus is on delivering strong returns over the longer term. We fundamentally believe that as long-term investors, we can afford to be patient when it comes to riding out the day-to-day ups and downs in investment markets. Our active investment strategy is designed to navigate all market conditions, protecting your savings during downturns and maximising your returns when markets rise. And while periods of volatility can be unsettling for some investors, in our view, not only are they a very normal part of investing, they can actually yield opportunities for investors with a longer time horizon. And diversification is also at the forefront of our investment strategy, not just across asset classes, but also within them. We believe diversification is the most important tool we have to combat the impacts of shorter-term volatility in investment markets, as it allows us to take advantage of those investment opportunities in different asset classes as and when they arise. Responsible investment also forms a key element of our active management approach. This includes how we consider issues like climate change, human rights and inclusion and diversity in our investment process. This doesn't mean that we're taking a moral or ethical view. It does mean that we're considering how this type of information may impact on the performance of an investment. And any investment decision we make is done through the lens of members' best financial interests. We invest in almost every industry and across a number of markets and geographies. This means our investments can be influenced by issues like how the rights of workers are protected, the impact of environmental degradation on water quality and availability, and how social inclusion and diversity can affect political stability. These types of issues can impact our portfolio beyond any one company or investment. And we can also benefit from encouraging more sustainable economies and markets, and actions both individually and collectively to reduce the economic risk presented by ESG challenges. As we outlined in the annual report, in the 2023 financial year, we've taken a number of steps to improve our approach. For example, by joining a collaborative engagement initiative that includes investors across Australia and Asia, seeking to encourage companies to find, fix and prevent modern slavery in their operations and supply chain. Another example is the continued focus on climate change and related impacts to our investment portfolio. Our approach is focused on real-world change, addressing the risk climate change poses to our investments over the long term and, where we can, investing in the solutions and technologies that are driving change and delivering returns. We also work with our engagement partners and industry groups to encourage change at both a company and regulatory level. We aim to not only drive the transition away from carbon-intensive industries, but also support the development of cleaner technologies and investment in infrastructure and initiatives that are critical to a lower carbon economy. Equip has joined Climate Action 100+, an investor-led group that aims to encourage those companies that are the largest emitters across the globe to take action to address the impact of their operations on climate change. For many companies and industries, we believe that using our influence to encourage investment, collaboration, and ultimately change is a more effective method of risk mitigation than divestment. Divestment is our very last step, because we know that when we divest from companies, we lose our seat at the table and limit our ability to encourage actions needed to change either processes or invest in new technologies that will speed up the pace and increase the scale of the transition. Whilst climate change is a focus of many of our members, our approach to responsible investment has been designed to also address other systemic social and environmental issues across our investments. You can read more about this in our responsible investment policy, which is available on our website. We do recognise that some members would prefer their super is not invested in certain industries or sectors. So with this in mind, this year we've launched our refreshed Future Focus investment option. Future Focus has been designed to have higher exposure compared to the MySuper default option to investments that have been selected based on their alignment to certain ESG criteria and also has specific sustainability criteria for key asset classes. We know that issues like labour rights and health and safety impact not only portfolio returns, but also the lives and livelihoods of our members. Through our responsible investment activities, we can focus on how we use our influence as well as our investments to help drive change in these key areas. Let's now turn to look at fund performance for the financial year ended 30 June 2023. As Scott highlighted before, it was a great result for the year. Each of our investment options delivered positive investment returns for the year to 30 June 2023, which was a great outcome for members. Those returns were aided by the strong performance in equity markets across the year. Despite this very strong performance, one concern we flagged in our end-of-year reporting to members was the apparent disconnect between this positive momentum in equities and the underlying economy itself. Equity market returns might have been strong over the year to 30 June 2023, but even then we held the view that there was somewhat of a disconnect between this positive momentum in equities and the underlying economy itself. The question remains whether interest rates will need to remain higher for longer in order to bring inflation back down to targeted levels. Inflation in the US remains stubbornly high, and the US economy has been surprisingly resilient. This is despite the US Federal Reserve raising interest rates 500 basis points since the beginning of this rate hike cycle. It needs to be remembered that there'll be a lag between the increase in interest rates and the subsequent impact on the underlying economy. And in addition to the market grappling with the question of how much longer interest rates need to remain at current levels, we now have geopolitical risks at levels not experienced for many years, with the tragic events unfolding in the Israel-Hamas conflict. Moreover, the ongoing war in Ukraine continues to show no signs of a peaceful resolution. All of this adds to the uncertainty that investors are experiencing right now. But it's in this environment that we're reminded of the importance of being disciplined in the execution of our investment strategy. Over the past 12 months, and in line with our overarching strategy, we've repositioned the portfolio by trimming equities and increasing our exposure to cash and bonds. With interest rates now quite high relative to recent history, we think bonds and cash offer attractive prospective returns. We receive many questions from members around the performance of bonds during volatile market periods. Bonds play an important role in our portfolios. They provide a stable income, are very liquid, and most importantly, provide excellent diversification benefits within portfolios that have allocations to riskier investments. Bonds typically perform well when share markets are doing poorly. However, whilst bonds are generally more stable and less risky than shares, there can be periods where bonds produce negative returns. Returns for bonds are inversely related to the direction of market yields. As yields fall, bonds produce positive capital returns. When yields rise, bonds produce a negative capital return. Recently, as inflation has risen sharply, central banks around the world have lifted interest rates to levels we haven't seen for a very long time. In Australia, the RBA has lifted the cash rate from 0.1% in March 2022 to 4.35% today. The rise in cash rates has resulted in yields across bond markets also rising, generating a negative return. Whilst the last couple of years has been a poor environment for bonds, the positive is that market interest rates are now much higher. This means that moving forward, the environment for bonds is likely to be much better, and there is ample scope for central banks to lower interest rates should inflation settle down or the economy weaken. We believe exposure to these traditional defensive investments will assist in providing downside protection over the medium term and lead to a smoother pattern of returns over what we think will be a potentially challenging environment for investors in the coming year. Rest assured, the fund remains well positioned to navigate what lies ahead and to continue to deliver strong, long-term investment returns for our members. If at any stage you've got queries or concerns about your investment options and whether the choices you've made are suitable for you, we offer a team of financial planners who will be able to assist you. Those contact details will be shown on screen at the end of today's meeting. I'd like to now hand over to our Chief Member Officer, Alexis Harrison.
Thanks, Andrew. Good afternoon, everyone. It's great to have this opportunity to talk to you today and to bring to life some of the things we've been doing to help you get the most out of your super and to achieve better retirement outcomes. Over the past year, we've invested considerable time and effort improving the interactions you have with us and with your super and retirement savings. As Scott mentioned, Catholic Super is here to support our members in preparing for financial freedom in retirement. And my team, the Member Office, exists to provide you with the best products, services and experiences to support you through your working life into retirement. Being a proactive partner as we support you on your journey to retirement is the essence of who we are as a fund and what we're here to do. We're equipping you today so you're ready for tomorrow. We know the Catholic Super brand is important to our members and our employers, and that's why we retain our unique Catholic Super identity. Some of you will also be aware that there were previously 3 sub-brands of Catholic Super: My Life, My Super, My Life, My Pension, and Transport Industry Super. We retired these sub-brands on the 30th of June 2023, and these members became Catholic Super members from 1 July 2023. It's an important change that will help us improve the operating efficiency as a fund, and that helps us keep our costs lower for you. I'd like to emphasise for these members that the superseded brands, that it's really a change in name only. All members continue to receive the quality products and services they've come to expect from us. Another key project that launched on 1 July this year was our new website. Not only did we significantly upgrade and expand the content available on the Catholic Super site, we also consolidated several branded sites into our primary site. That significantly improved the efficiency with which we can maintain and operate those sites, which again ultimately translates to lower costs for our members. And I think that's a really important driver to highlight. We undertake these projects so we can deliver a better and more supportive experience for you. That's always our priority as a fund. But at the same time, we're mindful of the need to keep our costs as low as we can. Doing so means we can keep our fees lower, which means more of your hard-earned super stays in your account for your retirement. The Catholic Super website now features a more intuitive structure and more personalised content. We focused on the principles of human-centred design to help us create experiences that are personalised, friendly and educational. It's easier to find what you're looking for, and just as importantly, it's easier for you to take action to prepare for a comfortable retirement. We added a knowledge hub with 16 interactive education modules on super and retirement topics, such as salary sacrifice, transition to retirement, income in retirement, and insurance. And we've created an extensive Explore and Learn section with a whole range of information tailored to different life stages, so you can access information that's relevant to you and where you are in life. For example, if you're just getting started in super, we cover a range of topics from putting aside super for your future right through to preparing a budget for next week. It's information that's designed to help you get the basics right and form a solid foundation. If you're further along and already building your wealth, we look at how to manage your super and keep building that wealth with resources on investing and contribution strategies and links to our calculators. For those who are approaching retirement, we really start to focus on understanding the different pathways to retirement and what you might need to achieve the type of retirement that suits your needs. And we look at some of the additional supports you can access to help you navigate that phase in life, such as the very important role financial advice can play, for example. And then for those who have already retired, we look at how to keep your money working for you throughout your retirement. So we cover retirement income accounts, your retirement options, investment options, and how your investment needs might change as you move into retirement. And again, those broader supporting tools and services such as interactive learning modules, access to advice services, and links to our latest events and seminars. We've also developed new calculators to help you engage with your super and plan for the future. The Retirement Lifestyle Calculator can help you understand how much money you'll need for retirement and how long it'll last. And the Super Contributions Calculator lets you explore the types and level of contributions that will give your super the optimal boost and possibly even help you save on tax. We've also expanded the unit price and investment performance dashboards for you too. As you can see, providing support through education continues to be a key focus for Catholic Super. And as a mid-sized fund that's perhaps more nimble than some of the larger funds, it's one of the key areas where we can truly add value for our members. We were particularly delighted to win the Member Education Award at Super Ratings' annual Super Fund of the Year Awards in October this year. Such awards provide reassurance for you as members to know that you're with a fund that's recognised by independent parties as working really hard to provide education that will support you. One of the key stages where education and support is particularly crucial is when our members are making that transition from paid work into retirement. Around 55,000 of our members will move into retirement over the next 10 years alone. And we know just how much planning and preparation is required to make a confident and considered transition. We sought to deepen our understanding of our members' needs at this time with a comprehensive research study in late 2022. And based on that research, we developed our innovative The Next Chapter approach to retirement. The Next Chapter is all about how we can give our members the right support at the right time and proactively partner with you as you approach your retirement years and then throughout your retirement. For example, we call our members as they reach that point of retirement stage so we can establish meaningful contact at the right time in their lives. We've created new retirement-specific resources for the website. We run face-to-face retirement seminars. And unlike many other super funds, we've maintained our full suite financial advice offering to ensure our members have easy access to in-house quality advice. Another way we're equipping members for tomorrow is through our default insurance offer. And we know how important it is to ensure that that cover offers value for money. We've been making some changes over the past year to refine and enhance the total and permanent disablement cover we offer. And while that's resulted in a small fee increase for TPD cover, the cover is now more beneficial for more members who find themselves in a situation where they need to claim. In partnership with our insurer MetLife, we've also been able to introduce the innovative 360 Health Virtual Care program. And that's not just for our members, but also for the spouses and children of our members. 360 Health is a confidential online service which gives you access to specialist healthcare in a range of areas. And that comes at absolutely no additional cost. It's simply part of your Catholic Super membership. You'll find more information on our website, so please do take a look. Lastly, I did want to emphasise how much we value and appreciate the feedback we receive from our members. Whether it's gleaned through research, such as our recent retirement study that I spoke about earlier, or regular surveys that happen as part of our Voice of Customer program, we're continuously working to better understand your needs, your goals, and how we can better support you. And of course, you can reach out to us at any time. If there's something we're doing well or something you think we can improve, please don't hesitate to let us know. We'll provide our contact details at the end of this session, but you can also get in touch with us via our website at any time. I'll now hand back to Michael to take us through the final agenda items for today.
Thanks, Alexis. That concludes the presentations for today. So thank you to our presenters and also to the Catholic Super team. For our last item on the agenda, we now have the Q&A session. So we've received a number of questions, and it's great to see such a high level of engagement from our members. Our first question is from Stephen, who asks, are there any new developments to address cyber security threats and protect both privacy of information and the investment funds in light of the risks from artificial intelligence, particularly identity replication? So, Scott, you're probably the right person to answer that, I think.
Thanks, Michael. I'm certainly happy to do that, and probably just reinforce some of the things we touched on before. I mean, I think firstly, cyber security threats they're constantly evolving, and we're committed to continuously assessing and strengthening our cyber security approaches. And some of the recent measures we've undertaken focus on strengthening data security, such as tightening data loss prevention, expanding our capabilities in proactively seeking out potential threats, and I think that's called threat hunting, and reinforcing our technology, infrastructure and operational capabilities. And we're also at the early stage of exploring the benefits and potential impacts of artificial intelligence. We've specifically assessed our current identity verification processes and have determined that at present there's no vulnerability to threats from AI identity replication. Of course, AI is rapidly evolving, and so we continue to monitor for any developing threats to our existing systems in this area.
Thanks, Scott. It's an important area. Now, we have a question on the subject of fees from Julie. And Julie says, I feel the fees are still too excessive at Catholic Super, and I'm wondering when and if they will be reduced in the near future. So, Scott, any comments?
Sure, happy to respond to that question, and thanks very much for the question. We are committed to supporting our members as you prepare for financial freedom in retirement, and we're very aware that fees have an impact on members' retirement savings. So it is important that we strike the right balance between our award-winning products and services and the fees that we need to charge to be able to offer them to our members. And we've provided Catholic Super members with substantial and sustainable reduction in fees since the joint venture and subsequent merger with Equip Super back in 2019. And that's come about via several reductions to investment fees. For example, looking at the options that many members were invested in, the total investment fees and costs for the Growth Plus option went from 1% in 2019 to 0.65% today. And similarly, the total investment fees and cost for the balanced growth option went from 0.89% to 0.61%. And more recently, from the 1st of July 2023, we changed our administration fee structure, which included providing accumulation members with a tax rebate on their admin fees and setting a fee cap, which also meant Catholic Super accumulation members now pay less in administration fees than they did previously. And the year before that, we provide Catholic Super pension members with a reduction of the fee cap from $2,500 to $1,000, which is charged for balances up to $500,000. We review our fee structure regularly and benchmark our position against the broader superannuation industry to ensure that we remain competitive. And as a result of the fee changes that we've introduced in recent years, we've been able to achieve a competitive total fee position for our Catholic Super members. But that, of course, doesn't mean that we stop there. As a profit to member fund, we're always looking for ways in which we can sustainably reduce the fees that we charge you, our members. And we're currently investigating the prospect of further fee reductions.
Thanks, Scott. The next question comes from Anita. And Anita asks the question, what is the best pension portfolio for retirees? So, Alexis, can you assist?
Sure, Michael, and thanks, Anita. What we do know is retirement is different for everyone. So the type of retirement account that works best for you, the type of investments that you choose, that all depends on your personal financial circumstances and the goals that you have for your retirement. At Catholic Super, we offer a range of retirement income accounts as well as a range of investment options. So you get to retire your way and invest your money in a way that best suits your needs. So you can see more about what we offer on our website. We also know that planning for retirement and how best to make the transition can be complex, but you don't have to do it alone. We offer comprehensive support through our team of expert financial planners. Again, please take a look at our website to find out more. You can also contact our advice team if you'd like to discuss this with them, and we'll show the contact details at the end of this session.
Great, good question. Thanks, Alexis. We've got a question from Andrew now, or for Andrew now, regarding the ethical investments. So, Andrew, Judith has asked, is this time of climate emergency, policy changes, government and private industry investment in significant changes, why are ethical investments currently providing somewhat negative returns?
Yeah, thanks, Michael, and thank you for the question. It's a good one. It's very topical. I think there's a bit to cover here. I mean, firstly, broadly speaking, you find some industries will perform differently to others at different points in the overall cycle. And this can be due to a number of things: macroeconomic conditions, structural changes within sectors, for example, emerging technologies and artificial intelligence, or other market influences such as commodity cycles or interest rate changes. And what this means is that assets or companies that might have a positive outlook over the long term might not perform as well as other companies or the broader market in the short term. And this may alter how an ethical-based investment or fund performs when compared to a fund that takes a responsible approach to investment. So while responsible investors tend to focus on how ESG factors may impact investment performance, ethical-based funds may prioritise the alignment of a company or activity with their values-based framework and then look at financial performance. So this may have a number of outcomes. For example, these options tend to focus on growth-oriented investments, which can have more volatile performance. They may also exclude certain sectors where the activity does not align to the moral framework of the investment option. So in general, ethical-based options focus on a narrow selection of industries and companies. And in some cases, this may cause underperformance, especially when sectors that are excluded perform well. So, for example, an ethical investor may exclude an energy company that relies on coal to produce electricity because it's an activity that is under risk from the transition away from fossil fuels over time. But a responsible investor would tend to focus on how they can encourage the company to take steps to contribute to this transition. For example, by investing in renewable technologies and battery storage and retiring older fossil fuel-based assets. So over time, as the company transitions and becomes cleaner and coal becomes a smaller and smaller part of its generation mix, it may meet the requirements of the ethical investor. They may then choose to buy shares in the company now that it generates most of its energy from renewables and isn't as reliant on fossil fuels. So over the long term, these two funds might look the same, but in the shorter term, their performance will likely differ, depending on how well the energy company has performed year on year. So because ethical investors make decisions based on a set of values as well as investment and performance, the performance of these funds may be different to those that consider how environmental or social issues may impact the risk or return of an investment and adjust their approach accordingly. Michael.
Great answer, Andrew. Thanks for that. This next query comes from Gregory, who's based in Perth. Gregory says, my wife and I are in Perth. We noticed that the local representative was no longer in place. Is there a plan to have one? Alexis?
Well, I'm pleased to let you know, Gregory, that our team operates Australia-wide, including Perth, and is available for either in-person meetings or phone and web-based consultations, whatever works best for you. So wherever you're located, you can access general advice via our service centre team or super advice on matters specifically relating to your super account with us, as well as comprehensive advice by our fully qualified Catholic financial planning team. We'll show you some contact details at the end of the session if you'd like to get in touch.
Great. Thanks, Alexis. Andrew, could you respond to John, who has asked the question, why have returns gone backwards?
Well, thanks for the question, John, and thanks, Michael. I think firstly, just to reiterate that it was a very strong year for the fund for the 2023 financial year. Catholic Super's Growth Plus option returned 13.01% and the Balanced Growth option returned 9.64%. But as always with markets, we've seen shorter time periods over the last couple of years where returns have been negative. And certainly since 30 June of this year, we've seen negative returns in most options, particularly those with higher exposure to growth assets like shares and property. The main period for this period of heightened volatility in markets has been the rise in inflation, evident here in Australia and, of course, around the world. And really it's around the global economy recovering from the impact of the COVID-19 pandemic. And so to combat this, we've seen central banks increase rates extremely quickly to levels we haven't seen for a very long time. This has certainly created some uncertainty in markets, but it's also meant that many consumers have less money to spend, which means it's a tougher environment for business to make profits. So while this has led to a challenging time in markets, we are comforted by signs that inflation now looks to be easing and believe this adjustment period is closer to ending. And certainly if you actually look at markets over the course of the last month, we've actually seen things start to turn around pretty material. So it just highlights, as always, markets can be particularly volatile over the shorter term.
Yeah, that's been quite challenging and quite fascinating to watch. Thanks, Andrew. That's excellent. We've also got a question from Colleen. And Colleen is asking, where are my funds being used? So, Andrew, maybe that's another one for you.
Sure. So we offer, we touched on it earlier as part of the One Fund project, we offer now a range of diversified and sector-specific investment options. And importantly, all of this information is very much available on our website. And there's also a guide for members there, how we invest your money, which you'll also find online. Each diversified option invests in a range of asset classes, Australian and international shares, property, infrastructure, alternative assets, fixed income and cash. And of course, the sector-specific options, as the name suggests, invest in a single market sector. There's a lot more information on the website, and so plenty for members to explore. Michael?
Great. Thank you very much for that. Well, of course, time's gone very quickly, and unfortunately we don't have time to cover any more questions in the forum. So all of the questions that we've received, including any that we haven't addressed today, will be available on the Catholic Super website in January. So in closing, I want to take the opportunity to reiterate that as your super fund, our purpose is to support you as you prepare for financial freedom in retirement. That means delivering strong returns, long-term returns, whilst also keeping our fees as low as possible. And that means providing you with the personalised service, support, guidance and advice you need to achieve the best possible retirement outcomes. On behalf of the board and the management team, I again thank you for your time today. We look forward to continuing to support you on your super and retirement journey. If you have any questions about today's meeting or about your super, please call our service centre on 1300 655 002, and it's open between the hours of 8:30am and 6pm, Monday to Friday. So that number again is 1300 655 002. So that concludes our 4th annual member meeting, and thank you for your time. And I hope you have a Merry Christmas and a very happy New Year. Thank you.